In this episode, we'll be going over standard deviations and what they do, what they are, and how to use them in our trading, and how they can be perfect profit target areas and levels of reversion, reversals, or accumulation. So first things first, let's get these settings down and understanding how to actually input the settings to get the standard deviations. So this indeed is a Fibonacci retracement tool, and these are the inputs. So 0, 1, -1, -2, -2.5, -4, and -4.5. So the setups we're going to look for to apply our standard deviation is going to look something like this. We have strong manipulation, and this is the starting of a smart money reversal. So in this case, we can see we have this high and this low as the last manipulation leg before we actually have that SMT, and we tap into that higher time frame discount PDO rate and we reverse. So to draw our standard deviations is very simple. All we do is we take our Fibonacci tool from this low to the lowest low and to the highest high. That was the last leg of manipulation, and we set it as that. And as we can see, we have this standard deviation placed now. And when we have standard deviation placed, we want to make sure it aligns with some sort of liquidity. So we can see this is a intermediate buy side liquidity, and we can see 2 to 2.5 rest in between that. So this is our first target, this is our second target, and the 4 to 4.5 is our maximum expansion and our last target. And as you can see, it's a little bit below this liquidity, and that's perfectly fine, as we know that it can be a little bit below, a little bit above, or resting right in the liquidity. So this makes it as a accurate target for our position to go. And you can see we come up from here and we tap into the 2 to the 2.5, we tap in, we have some sort of accumulation here, and then our final target is up here, and we clearly get that on. This is how you can apply standard deviations and having clear projections of where prices, and this is especially useful when we're at all-time highs and we don't have anything to look at on our left, right? There's no liquidity targets, no nothing to target. So standard deviation really makes great projections. This is another beautiful standard deviation manipulation leg. We can take it from our low that's right here and the last high that was a part of the manipulation, and we can see the standard deviation targets line up with this liquidity, and we can see after coming right here, we have a strong accumulation for a couple of days, and this allows for precise targets and to understand when the market will actually cap out and this is a key tool that all ICT traders learn.